Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, September 23rd, 2019. It's really a follow-up to the charts I've been watching lately. Most of what I've been focused on has been, other than the broad markets, I'll always post equity market analysis, precious metals, treasury bonds, the risk-off assets. That's where a lot of my focus has been, a lot of my trading. I mentioned being both long and short those in the last couple months here. Yeah, but more on the long bullish side recently. And I want to start out with the broad markets. Just always, come back to the daily and weekly charts and just mention the bigger picture. The most important technical developments that I think we'll see soon would be a break a break below the trend line off the December 24th lows. On QQQ, we have well-defined uptrend lines. Look at XLK as well, comparable trend line there. And of course, you have the top of the recent trading ranges. It's not boxed in anymore on this chart, but the August trading range right there. There's the top of that. So those are big levels I'm watching. And on the weekly chart, before I leave the daily chart, we have now what looks to be a likely, if it hasn't happened yet, maybe it's intraday, but on a daily close, we haven't yet had a bearish cross, I should say. Keep going backwards here. Bearish crossover on the PPO right there. And as I showed you before, you can add a PPO histogram to kind of visually show you when you get those. And what I like to look for are those big hills, I call them, big mounds. That's where momentum is strong. You have the PPO line above the signal line. In this case, the PPO line is the orange line right there. The 9 EMA. And if you don't have a PPO, I say this often, you can use a MACD, very close cousins, show you a similar thing. And then you get these crossovers after the big hills, and not always, it's not a perfect, you can't use it, I don't believe as a standalone buy and sell indicator, but it does help to show you when you get the trends, and more so especially when you have trendline breaks. For example, here was one right here, and you had the PPO flip, you had a crossover, a bearish crossover, but you stayed above that primary trend line to right here at this point. And so what I like to do is align those bearish crossovers like you had right here. You can see that trend line break there. Bearish PPO crossover, and it stayed bearish. You had it pretty much signaled that big drop there. And so what happens soon if we get a breakdown, if markets go much lower today, a lot of things are going to happen. You're going to have a bearish crossover here on the PPO after a nice big green hill, meaning the trend was bullish there, and that would give you a sell signal. But more importantly, it may also take out this downtrend line or uptrend line, I should say, from December 24th. So that's one thing we're watching. And let me pin that back up there. And then the weekly chart, there's the trend line. I always say this, the shorter term time frames you go to, the quicker they give you signals, buy and sell signals can get you in and out a lot faster. But the higher chance that you have it being a whipsaw signal or a false buy or sell signal. And so when you go out all the way here to the weekly charts, for example, if we get a weekly close, a big red candlestick close below that December 24th uptrend line, that would be a pretty powerful sell signal. But what I suspect will happen, whether it's this week, next week, or comes months from now, by the time you have the weekly candle close, you'll probably have a big red candle like this where most of the drop came, and so you have to wait on a weekly chart. You always have to wait to the 4 p.m. Friday close, because anything that happens intra-week you can have a whipsaw signal. So that's why I cover these multiple time frames, and I'll leave that up to you whether you want to get a jump on a trade. In this case, if it's a short on QQQ, if you're not already short, I know a lot of you are, and I'm still short the Qs. But that's the final straw should really be, I think, that 40-week exponential moving average, which has saved us. Even here, we had a big, and there's a good example, big intra-week drop below, only to snap back up and close right about on it, maybe a hair below there. And again, it just does a good job of defining the uptrends. And once you break it, you're in a downtrend, and then you can often short bounce backs to that level. All right. Here's the 60-minute chart. This is where we're at right now. I'd mentioned somebody on Friday's video, somebody commented, hey, you've been short for 4 to 5 weeks. Actually, it's been closer to 6 weeks since I started shorting. if you remember, short from this drop here, went long there, was long up to about halfway through my bounce target zone and scaled, and I said I'd scale up to the top and added a few bounces to the top. And so that was the top of the target. The target zone was turned out to be, remember I put the target zone out here after we bottomed and had a line right where the top of the August trading range proved to be in both SPY and QQQ. But from there, and that's where we added the official short trade. Even though I started scaling a little earlier, waited there in that last official short trade on QQQ. And the point that I mentioned on there, and I just wanted to speak to this because I do all the time, but a lot of you may not catch it. The reason I prefer to trade futures, individual stocks, and ETFs over options, believe me, I've had plenty of experience with options, but my thing is I do a pretty decent job, I think, of figuring out where a security is going to head, what levels it's going to go to, identifying price targets, of course, and of course the direction. But I find it's hard enough to do that, over time, accurately call where the stock market or individual stock is going, but then to not only figure out where it's going to go, but exactly when it's going to get there, that brings in a whole other degree of difficulty. And that's where options, in this case, I told you back here on the bounce, I didn't think we were going to go into a month-and-a-half long trading range, or over a month. Most people probably didn't, nor did I think we were going to pop above that trading range. But when we did, and as the time came and we started to look like it might, with the the way the market was looking, price action, everything else, I said it would probably be a marginal pop above, and that way I'd ride out my swing shorts, and that's what I've done. So we went about 2.25 in QQQ, 2.25% above the trading range. And the point being now is, from where we shorted, where the top of that range was, even a little bit below where the official short trade was, QQQ is right now up about 0.5% above there. And from the top of the range, we're almost back to it. We're about 0.4% above there. So here's a case where I've yet to be proven right, because the market hasn't broken the downside of the ranges. I have targets that are a lot lower even than what the official trade is. I'm trying to find that official trade, had it in here somewhere. This was that last official trade, and I'll let it go on the last stop above there. But I know many of you are still in it, and these are potential targets. But as I've said before, if this starts to play out, in other words, if this, right now I'm still favoring, at least to move down here before a decent reaction, decent bounce down to that 170-ish level there. But if that is hit, as I've said, it will have longer term implications here, because it's going to take us down below the trend line, again assuming that target's hit, that T2. And it will most likely take us, well, let's see, will it take us below the 40-week moving average? Yeah, because there's the 200-day moving average on the daily chart, and that's the same as the 40-week moving average. So that would trigger a sell signal, which would then bring us down possibly to this longer-term primary uptrend line right here. And again, could certainly be the catalyst, because it's going to firm up the bearish case here on the weekly chart if that happens, and that's only going to help to firm things up again on this monthly chart, and that would give us probably the most powerful sell signal. Here's the trend line off the lows in 2008 in QQQ. And that would then give us potentially give us a monthly candlestick close below this uptrend line, this bull market uptrend line. Remember, these were stick saves back here, and then you have that key 20 period moving average. So again, don't ever lose track of the long-term stuff. Now, short-term, let's just dig back down into the short-term charts. I know I usually post the futures in the pre-market. I know you guys said had a lot of feedback recently. You prefer to see chart images, although they can take almost as long as it takes for me to do a video. I know it's a lot shorter for you guys to glance those charts. So I'll work more on getting out screenshots of charts in the morning. And then I like to follow up with these videos, because there's just so much to this, and it's all interrelated. So as I said in that towards the end of that post this morning, what the precious metals do from here will quite likely depend on what the market does. The market's at a pretty important technical juncture right now, so that's why I want to do this video. QQQ, let's strip away all these trend lines and annotations, and I've talked about the potential inverse head and shoulders. It shows better, it's a little more clean on the futures, but we have it here as well. You look with an upsloping neckline like that, your left shoulder, because QQQ is gappy, of course, right shoulder, and then your neckline there. So a break of that could certainly trigger a sell-off. Now, we're also still at and above some pretty important support levels. Let me jump over to that. I like to use NQ for this. I have two different charts I'm tracking on NQ. This one shows 77.92 is a pretty important support level, actually very important. It was the top of the August trading range. Remember right here, there it is. You have multiple moves through that trading range right there. We broke out, back tested. So this is a big level to watch right now on the futures. And then I have another chart of NQ I want to show you as well. It's right here, I believe. Yep. And there's that potential inverse head and shoulders, not inverse, it's a regular head and shoulders topping pattern. And again, not crazy about it because I prefer to see these on daily and weekly time frames, but they do often play out on the intraday charts. And more importantly, if enough traders are watching them, then that's all that matters, because they're going to short that on the technical breakdown. So you can see we're at the neckline. All morning we've been flirting with that. So we're at support right now. If the neckline breaks, we still have that probably even more important, yes, I would say a more significant technical level support just below at 77.89. So you really need to see this go to get this thing to play out if it does break down. ES, the S&P 500 futures, they're also at a pretty decent support level and have hit it at least a hair above it right now, and that's at 29.80. It says here on my chart 29.79.95, so we'll call that 29.80 right there, and pretty decent support. So that's the story of the markets. Now, they did recently put in these divergent highs, so divergences have played out so far. The big question, is there more downside? I would suspect so, because the scope of these divergences, especially in SPY and ES. Remember, QQQ didn't put in the divergence because it never made a marginal new high, but SPY did. So we'll jump over for your SPY traders. Let's put on the lines here on the SPY 60-minute chart, and there it is. Divergent high right there, divergent high number 1. Had a little correction, but we simply extended the divergences, so that what that means is these divergences did not play out. They had a little correction, but they were continued because it's the same divergences right here. The indicators making a series of lower highs, and so far a pretty impulsive rejection or move down off that divergent high. But the thing is, as I said, there's pretty good support as I just showed you on ES. It's a little bit lower here on SPY, so SPY traders looking at that level at about 296.61 right there, and pretty decent support. If that goes, remember, SPY has yet to test or back test the top of the August trading range, even though QQQ already did so, and so that would be a natural support level. So if you're looking for some near-term levels to watch, I think a break of 296.61 would likely trigger a move down there. But the reason I go over all these charts, even if you don't trade NQ and QQQ, you want to watch that, because here's the way this works. If, let's say, SPY does move down to 296.61, and let's say it breaks it, just this chart alone, a vacuum, I would put very high odds of 294 hitting. However, as I just showed you a second ago, in NQ we have the 77.92 level just below, so that needs a break. So if 77.92 on NQ goes, then that would most likely increase the odds that if 296.61 goes, then we do go down to 294, and that would be, from where we're at right now, that's a drop of about, it's not much, about 1%, and then we just have to see how things go from there. Otherwise, as I like to say, support is support until unless broken. So I just showed you all the indexes at support right now. And let's just take a quick look at the precious metals. You know what I'll do? I'll start with the charts of the index ETFs, because I know, again, a lot of you don't trade futures. I understand, that's fine. Futures charts just give me better insight because I'm seeing the round-the-clock trades. For example, the futures opened up last night. You can see what everything has done since then in the early hour session. And on SLV, for example, here all we can see is where it closed Friday and where it opened today. So there was a story to be told in the overnight, futures and early hours. And but again, this chart, I don't have it I actually haven't marked this one up in a while in this 60-minute chart. Let me take this trend line here. Let me just add the most important thing here. Just like on the futures I showed you on the SI, which are silver futures, we had bullish divergence recently, at least here on the PPO, and that was a catalyst. And we also had a downtrend line. I had a comparable downtrend line in silver futures, and that was recently taken out. But you can see you would have had a jump start on silver futures when they broke out. With SLV, you would have had to chase a nearly, right now it's up over 3%. So that's why you can get a little bit better jump start or head start by trading futures, because a lot of these breakouts occur in the overnight session. See all these gaps here, gapped up above the previous high there, and then that established the new support level right there. Okay, bigger picture, and I usually start with gold. That's obviously the more important of the precious metals. The rest are just going to pretty much follow gold's lead, especially with the flight to safety bid thing we have going on. But there's silver. It's one of many different boards I have here. But you know, it got really ahead of itself. Everybody wanted it. They didn't want it here when it broke out, you know, or here. But they wanted to buy it here, and then what that did is it created a blow off top, that little near-term blow off top. But again, I maintain that silver made a very, very powerful, much more significant breakout on the weekly chart, the daily chart, when it took out this blue downtrend line, and it appears it's in the early stages of a bull market. So that was a correction more than a lasting blow off top. It was a near-term blow off top, and we pulled back to a very solid support level. You can see it there. You know, with a lot of reactions back here from 2017, 2018, around that level. And when I look at the weekly chart there, this is what I'm talking about. This is powerful stuff right here. This downtrend line, we were highlighting it back at the time. Highlighted how impulsive the breakout was. It didn't just limp through there. There was a huge green candle. And also hit the 1758 target, overshot it on a weekly closing basis. I'm sorry, intra-week basis. You zoom in, you can see the skinny part. That's the candlestick tail or shadow, or above it's a wick or shadow, with the body closing back down below that level. So we had a weekly, intra-week overshoot of that key 1758 resistance level. You can see all the reactions here from below, reactions there from below, reactions from above, another reaction from below, and that was an initial swing target, and that was hit. We were overbought when we hit it. But again, the thing is, we pulled back to support now, and I'll just say this, that this was certainly an objective level to go long. It was highlighted quite a bit on the 60-minute chart recently. And where we go from here will most likely depend on what the market does. If the market is headed lower, if I'm correct, and that's still yet to be seen, we're still we're still above the August trading ranges by a hair, as I just showed you. So we got to take those out and then start moving lower. But if that happens, we could be looking at the next leg up in the precious metals here soon. If not, if there's more upside, the markets want to pop new highs, go a little higher, you know, silver could come back in and may want to trade in a range. But you know, I'm leaning this way. Not an immediate blast off. It's possible. It's certainly possible. Remember, people couldn't get enough of silver. It didn't let you in. If you didn't buy it back here, you wanted in, it didn't give you those pullbacks. We've had a correction. I think that was a time to get back in recently. And we don't have a green light yet. We still need to take out the recent highs. Let me move on to gold. I'm spending a lot of time on silver, and where gold goes is probably more important, because silver will follow ultimately. All right, gold hit that 143.87 target. Again, powerful pattern on the weekly chart, and this is what helps to formulate my longer term bias. What's going on in the weekly chart? Big symmetrical triangle pattern. This is really where the bull market started back here. Highlighted back at the time in late 2015. That's when gold started to reverse, bottomed, and started the bull market. And it took a while. We kept failing here at that 130 level. Finally, once we broke out above the triangle, we broke out above 130, rallied all the way up 143.87. Again, a brief momentum fueled overshoot, came down and corrected. We were quite overbought, and we're still overbought. But as I said, overbought in a bull market is not necessarily a sell signal. So Yeah, my convictions aren't super high, but given one of the two, if I had to be right now in my active trading account, long-term accounts, I've mentioned still, gold. I think that's a bull market position. It's asset allocation, diversification position right now, especially with the unfavorable long-term outlook for equities. But near-term active trading stuff, swing accounts, yeah, I certainly favor the long side right now. And next target there is still that 151.18. That's the initial bull market. I think we'll get a longer consolidation if and when we hit that level. It's a pretty solid resistance level there, and then we'll just have to see how the charts look if and when we get there. There it is, gold. Did an update again, so I won't spend a lot of time. That was the FOMC whipsaw signal. That was the Fed day right there. Rallied, gave us a false breakout above the trend line. Fell, hit that 1492 support level, which has capped all the pullbacks recently, and then went on to break out, back test, and start moving higher. It is coming up on resistance right now, so I made it clear this morning, unless the markets break down, and even if they do, let me just say this, the risk reward right now is not very favorable. It's not an optimal time to be adding if you didn't have gold, because we're coming up on that's a pretty significant resistance level, about 1534, 1535 right there. Doesn't mean it can't go through there, especially if the market were to just break down and start selling off hard. Gold could just rally right on through there, but again, that's a lot of ifs, and you might have to just play it by ear and watch what the market does. But I can say that should the market hold these supports, we'll probably see a pullback there, especially if gold manages to rally on up to about that 1534, 1535 level soon. The other ones are platinum, that's palladium, platinum and silver. These are the ones I think have more upside. Palladium's bouncing, palladium's up against resistance, has a lot of divergences, things that these other ones don't. So these are the ones I'm more bullish on. Platinum, which is now the only thing I did since last week, and again, I think I told you guys I had to run out, leave town. I had a wedding out of town this weekend, so Friday I didn't get a follow-up on that with a second video, but they're the same charts. The only level I added since last week was this 962.50ish right there. I believe I had the previous target zone up here between 965.70 and 968. But you can see there's a pretty decent level there, about 962. So I just took some profits on some of the precious metals. In fact, let me see. Nope, I'll pause this. I thought I did, but I didn't do it on platinum yet. Oh, I sure did. I was looking, when you look at Interactive Brokers Trader Workstation, glance at when you close a position, at least the way I have it set is they fill the quantity column gets filled with the bid size. So I thought I had 3 contracts of PL when I was out. All right. Anyways, it's again at resistance there, 962.57. I believe that was in there. It was also top. Here was a little mini head and shoulders pattern right there. You can see, and that's the right shoulders of that, or the both shoulders, the left and right shoulders of that pattern. We broke down. There was the neckline right there. We had a breakdown, came down, fell to that level, and again, that's the big level right here. We went below it briefly on PL, 930. Excuse me, I'm still recovering from that wedding this weekend. All right, there's the uptrend line to watch. So I think any pullbacks to that trend line should be objective, although we'll have to watch the other metals too, and you can see support there around 949. So again, that would be an optimal scenario, but it all depends on what the market does here. Like I said, market breaks down, these things could continue to run, take out the, either move to the top of the resistance level or take it out. And then bigger picture is, remember, the metals have all been consolidating. They all corrected. They were all overbought, and they've corrected now quite a bit. Haven't completely worked off the overbought conditions on the weekly chart, but on the daily chart we've been consolidating now this whole time here since early September, pretty much all month. So if they wanted to, I think they could certainly move up. And remember, more importantly, as I showed you, there was a technical breakout right here in a lot of these metals. And try to grab a trend line here. You see a lot of levels here, but what I'm looking at is the bullish falling wedge pattern, breakout, back test, and this wedge pattern. You take the widest part, of the wedge, add that to where the wedge broke out, that gives your measured target. So Platinum could certainly make a run here before any major pullback, make a run up to test the previous highs, and then a breakout of the previous highs, and you'd want to see that happen on gold as well, ideally. And so there's GC. Remember, GC has kind of been trading for quite a bit longer. Gold led the way. Gold is the flight to safety, the king of the flight to safety instruments with precious metals. Although it didn't peak till right here, it's been moving mostly sideways now for a couple months, all the way back to the beginning of pretty much August right there. And same story, breakout, the little Fed-induced whipsaw, coming up on some resistance levels there. And then I think I already covered silver. If I didn't, there's silver at the 18,651 target right now. So I'm seeing all these metals at just very near-term overbought. I think, again, like I said, the risk reward to adding right now is not very good. That doesn't mean they can't go up. And it can, again, it will have a lot to do with what the market does. But when you put a line there, I don't have my overbought, oversold lines. And by the way, the 70 level, when you're looking at things like silver, I always say this, the traditional overbought, oversold lines are at the 30 level for oversold and 70 for overbought. That doesn't work with SI, with silver. You start being concerned of getting out of your long positions when the RSI hits 70 or going long at 30, you're going to get smoked, because the RSI, and I'm using an RSI 9 here, sometimes I'll use an RSI 14 setting, but there you can just see what happens when you get to these levels, even during a bull trend. In this case, you didn't correct much, but you didn't go up more. You consolidated. You hit overbought again. There was a little blip. You went a hair higher, and then you corrected. So all I'm talking about here is risk reward. This time you were overbought. You made a slightly marginal new high, and you did so with a divergent high and then the big correction. So again, the risk reward is not very favorable. But if you're already long, you might want to ride out any pullbacks. Maybe something like that happens. Maybe we have a little blip here, go up, push on, make a marginal new high. RSI comes in here at a lower level. Then you get divergence. You might get a bigger correction.